Now, if you happen to be anything like myself, you're looking through the current market landscape, trying to find deals in the market, potentially higher yielding ETFs and or stocks that yield say north of 10 or 12%, but still have the potential to grow over time and have a super high quality underlying holdings. Now, I have some good news and some bad news. There's tons of names out there that we should all definitely stay away from just because they are far too risky for most of us. But in today's video, I'm going to go through 5 different ETFs that all have a starting yield north of 12%, which means you're going to be able to generate a ton of income from day one. But all these different ETFs have a high quality strategy and a high quality underlying holding. Now, every single one of the ETFs we're going to talk about are personally in my portfolio as of right now, and I've been buying more of them as of recent. So if you want to see which 5 ETFs have a starting yield north of 12% and that I would consider relatively safe, well then make sure to stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. The first ETF that's offering north of a 12% trailing 12-month dividend yield is one of my favorites, JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. Now this ETF, along with anything else that's basically attached to the Nasdaq 100, has been hit as of recently, offering a potential buying opportunity, but again, we don't know when things are going to stop trading down. Now JEPQ seeks to deliver monthly distributable income and Nasdaq 100 exposure, but with less volatility, which has been nice, especially as of recent, where the Nasdaq 100 has seen some ugly days. Now, along with offering exposure to the Nasdaq 100, there's also disciplined option overlays, implementing written out the money Nasdaq 100 index call options that seek to generate distributable monthly income. Now, I've been buying JEPQ basically since inception of this ETF, and as of right now, where it's trading, the trailing 12-month dividend yield, like I said, is massive. Not to mention the dividend payouts with this one are likely going to be massive over the next several months if we see volatility stick around. But even as of recent, somewhere around 45 to 55 cents over the last several months is what this ETF has paid investors for every single share they hold on to. Now, I already have a decent sized portion of JEPQ in my portfolio. I think I have around 500 shares altogether, but JEPQ is always on my watch list, and I'm definitely going to be adding more very soon. Another ETF that's been beat up as of recently and offers north of a 12% trailing 12-month dividend yield, around 12.11% to be exact, is the Goldman Sachs Nasdaq 100 Core Premium Income ETF. Now, I know what you're saying, well, what's the difference between this and JEPQ? There's lots of ETFs across the market these days that do more or less the same thing, but there are some different intricacies. Now, I'm not going to go over all those intricacies in this video. I do talk about all these different ETFs individually though on my channel, so check out some other videos. But GPIQ is one of my newer favorites because, once again, this ETF seeks current income, which was what I'm looking for, but also maintains prospects for capital appreciation because who doesn't want their portfolio to also go up over time? I talked about the fact that GPIQ offers a strategy that's very much so in line with what I'm looking for, that being, once again, income generation, but also some upside potential relatively tax efficiently. Now, the cool thing about GPIQ is that the ETF pays more or less the same exact amount for every single share that you have per month, around 40 cents more or less. At least that's what's happened over the last 12 or so months. So for every single share that you buy of GPIQ, which as of right now is currently trading quite a ways down from the all-time highs, you're going to be adding another 40 cents more or less to your forward monthly dividend income. All to say, another Nasdaq 100 premium income style ETF that you definitely should take a look into. This is a smaller position in my portfolio, but I have been adding more as of recent. A few more ETFs are yielding much more than 12% as of right now. QQQI, the NEOS Nasdaq 100 High Income ETF, another Nasdaq 100 High Income ETF. Again, all three, the ones so far that we talked about, all offer exposure to the Nasdaq, which is relatively high beta, which means you're going to have a potential for a ton of income generation from day one. Now again, if you're not a big fan of the Nasdaq, I get it. There's also S&P 500 oriented high income ETFs. I talk about all of them in my channel, and I have tons of them inside my portfolio. But just because the Nasdaq has been beat up so far in 2025, it is offering a potential buying opportunity. Again, who knows what's going to happen with the market in the future though. Now, QQQI offers a massive starting yield as of right now, well north of 14% trailing 12-month dividend yield. Around 60 cents more or less per share per month, so what we've seen historically for this one, and once again, a very high quality strategy, and an ETF that has become a large portion of my portfolio, relatively speaking. But an even larger portion of my portfolio is currently made up of SPYI, an ETF that I still am adding more of as of right now. I think I currently have almost 1,000 shares altogether. SPYI offers S&P 500 exposure, so again, if you're not necessarily thrilled with the Nasdaq and all the high beta nature of it, S&P 500 exposure might be better for you. This ETF invests in the constituents of the S&P and then utilizes options to pay out a ton of income, around 12-13% trailing 12-month dividend yield as of right now. Not to mention, this ETF and the last one are also very tax efficient in how they pay their income, but again, we can save that for a future video. ETFs like this one and others that do utilize an underlying index like the S&P 500 and or the NASDAQ are relatively safe because you're not just placing all their eggs in one basket. You're not just investing into something that offers exposure to a single stock or two, which by the way, there's nothing wrong with that, but just for me specifically, I'd rather have an income-oriented strategy that utilizes exposure to an entire index is high quality as the NASDAQ or the S&P, just for me personally. Now, the last ETF that I've been buying as of recently, still in a small amount, just sort of testing the waters, is OMA or OMAH, the Vista Shares Target 15 Berkshire Select Income ETF. Now, this ETF is cool because it offers exposure to some of the largest holdings in BRK.B. Yes, it's Berkshire Hathaway, but with an option income strategy layered on top of it. This ETF has a target distribution rate of 15%, so not only well above that 12% like we're looking at, but so far the distributions have been massive, relatively speaking, and especially because a lot of the names in BRK.B are on sale right now, at least generally speaking on sale. This could be a good opportunity to buy some shares of OMA, dollar cost average down if you already own some shares, and it's definitely an ETF that, like I said, I'm grabbing a few shares of here and there. Now, with over a 12% distribution rate or even a 15% distribution rate like this ETF offers, you are going to see a massive amount of income coming in with even a few $100s or a few $1,000s invested. All that to say that there are a ton of high income focused ETFs, especially high quality ones that are on sale as of right now, and I'm taking full advantage buying my shares every single day like I have been over the past several years. But now lastly, before I go, I do have a question for you guys down below. Out of all 5 of the ETFs I talked about in today's video that are all yielding north of 12% and even upwards of 15-16% trailing 12 month. If I were to ask you to pick your absolute favorite of the bunch, which one would you pick and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more picture content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.